Good afternoon, Scott Rutledge, T3 Live. Welcome to today's recap. So market opened up a little quiet and then it just powered ahead. Spiders went through Friday's high. You saw another round of short covering, taking us back into a bigger resistance zone that we've been trying to outline probably from about a week or two ago, saying this is probably where we go at some point in October. I didn't think it would happen so quick. You know, my actual yearly target was 1250 to 1300 back at 1150. And now that we're here, you just have to take a little bit of caution because you have to know where we are in the charts as far as the bigger resistance and the picture that's being painted right now. At this point, now I'm not saying it wasn't tricky before, but now it's like tricky. Now, I've been trying to be net long this entire move, and now I'm at the point where, okay, these second and third tier stocks are starting to move. There's still opportunity in some places long. We are a bit overbought. We are coming into the zone. Like a week ago, I talked about trying to be long 48 positions and short some spiders just in case you want to trade against it. If we open down, you can cover some spiders. Then you could add to your longs that you like that are worthy of your relative strength parameters. And now I'm not saying we can't go higher because it does seem like we can, but when you have Wednesday coming up really soon and everyone just thinks that we could just rally right into Wednesday, I was thinking on the radio, I was talking maybe they pull us in a little bit tomorrow. But either way, there's been a big move, participation across the board. There's still some setups, and there's still a lot going on. So I'm just going to right to the chart. You look at the spider here, or the SPX, another nice day. All right, we talked about this pattern. Here's your reversal. Here is your small consolidation. Broke this downtrend, move up into resistance, held here for a few days, rightly so considering look where it came from. And then here was your nice, powerful 3-day move. The whole thing is, though, if you remember when we got short or got out of the stock market at that head and shoulders, top, here was your neckline. So if you take a more of a broad view here, we're coming back up right to retest that neckline. Okay, so this was, remember, the left shoulder, the head, the right shoulder. We talked about it so many times. This is when IBD put us back in a correction. So you actually had a little time to get out before here. So also another moral of the story is here. As a macro investor, I know not everyone's a professional trader, not everyone could be in front of their keyboard all day long, but there's been two really macro patterns this year, in my opinion. One, the head and shoulders top, where once IBD put us in market correction around 1330, you could have loosened up, and then when we broke 1250, maybe you didn't have to get short, but maybe you took off some excess positions, and if you did so, you had to move all the way down to 1100. That's like a 150 handle move lower. So I'm not saying you had to sell the top at 1330, 1380, but if you look back at the chart, here's a spot where you could have loosened up. If you're an active investor, someone who pays attention to the market. And then you had the move lower, and then we navigated this whole area. And then on this day was a day we really talked about a day to take notice, a day to switch gears, a day to maybe put some stuff on, look to see if we can get continuation. Really, the continuation, in my opinion, happened here. So if you're trading from an active investment standpoint, you didn't sell at 1350, you sold at 1250, but then you also didn't buy back at 1074, but maybe you bought back at 1100, then you saved yourself 150 handles of pain, which was about 12%. And lately, that's a big savings. Anyway, back to the charts. So this is exactly where we are. I think a lot of people, started thinking they could short in front of 1250. So either you're getting net short or hedged, but really, it could go up to continuously and push people, more than they thought, and get up to this 1274 area. So treat this as a zone. Guys were talking to me in the chat because I had a lot of longs on, and they're like, why are you in an SDS? And in my swing account, I figured I'm going to do a 2 to 3-tier approach right there. This is the first time I'm trying to buy the SDSs. Figured 1255 to 1275 might be better from a cute short situation where the first time we enter that zone, it might be a better short than a long. And then once we measure the action based on the pullback and the participation, you take the trade off, and then maybe it's viable the second time we go there. I could be wrong, but I'm looking at this move. I'm trying to stay long stocks, but in the swing account, I figured I'm not going to be perfect, but this is a spot to perhaps look for something cute. And obviously trying to be cute could get ugly, so I'm not going to give it such big size until I see confirmation, because I'm not really seeing confirmation from the stocks that we're ready to be done. Look at something like Apple. Apple just woke up today. Every bear in the entire market was hoping that Apple would fall apart because that was the only thing they could point to or hold their hat on. But look at Apple today, right out of the blue. it just took off. It broke this small mini downtrend, okay, this 3-day downtrend. It's still, after all the hoopla, all the, they missed on earnings, this, that, it's over, it still didn't even get to the 50-day. And now it closed pretty strong, and we'll see how it handles this earnings gap. Because right now we've been talking about this island top, how it could control the movement longer term. Not if it gets filled, guys. So we'll see how it handles. Maybe we get a nice little cash flow trade through this and then figure it out from there. As far as Google, I hate this stock. I'm sorry. It tried to go through the highs around 330 and then failed, and definitely hurt a lot of us in the chat. But if you look at the chart on a macro level, it's still fine. Obviously we like momentum. We like when it gets through a point like this. What was this, 599 in area? It should have went to 602 to 605. It didn't. It pulled off. But it's still holding higher. It still looks good. Still investment quality. But as a trade, it's definitely a little disappointing. As far as LinkedIn, that was a clean trade today. We talked about that in the morning call. I spoke about it on the radio. I bought some above 88, 89. It had a nice move to 95. Look at this one. This one at least gave you a move when it went through a level. Even though it pulled a little bit off the highs, this one, with Groupon coming out, I'm sure I said, they want to make this a bit exciting so they can perhaps get more attention for that, or Facebook or whatever. But all in all, this is above the moving averages. It's trying to clear. This was the first time we talked about it, if you remember, right around here, thinking that maybe get some attention. Now it's starting to get some follow-through or follow-on moves. The semis, another spot where we talked about relative strength with retail, had a really nice move today. Look at the SMHs, just starting to extend through this, this recent resistance. It has a bit more room. The RTHs, unbelievable. But actually, if you look on a short-term basis, very short-term, it did try and reverse at the end of the day after, this was holding higher. This was your add-on buy. And this small reversal here, I would say if you were in a tier 2 or tier 3, you get back down to maybe a tier 1. You could see a bit of a pullback to this 110, but it doesn't have to. The sellers didn't really take full control, but this would be a short-term sell signal, not a day to take notice, not a day to say game over. But if you look here, based on all this resistance up here, probably a spot that'll pause. Now the question is, where does it hold? Can it hold higher? And does it maybe fill this gap? And then still be fine considering where it came from. Today we saw actually a little cute activity in some of the old school or the fluff names, which also gives me a small little reality check that maybe this first move or this 3-week move is a little long in the tooth when you see these other small names up 10%, 15%. But we could also, one man's trash is another's treasure, and we didn't get caught buying these things, stuck in it. But when patterns get tight and expand, we can make money there. Today I was all over this Yoku. This was where I actually made my morning money. I haven't traded in a long time. I saw strength in Baidu and Sign, and I said, oh, look at this tight little pattern here. A lot of guys I think were buying it below 21, closed at 22.50, up 10%. People like to see that in a year. Now I think if it gets a little bit more volume, it could get to 25 or 26. Nice little trade here. This was the move off the lows, sideways action. I think it can continue. Guys are talking about Dang. It's been crushed. I think it's there's room. It's not something to get excited about, not something to get huge, but why can't it get to this 650, which percentage-wise is a big percentage, and then if some type of excitement comes in, maybe it gets to 8, but this does look like it's trying to leave this small area. These type of stocks, guys, it's only for guys who take multiple positions. Do not just sit and trade Yoku, even though it was really good today, Dang and some of the other ones. If you're holding 6 to 10 positions and you can handle that risk, because again, these are also speculative names, let the market work for you if that's your thesis. If you're only trading back and forth with cash flow, this will drive you to drink. It's only Monday, it's not even Thursday. Anyway, so if you look here, this looks like it could have continuation up to about 650 or higher. This REN also looks decent. This was the Facebook of China, and it just tried to clear this little area. So to me, it was worth a little try. I'm not in trying to break the bank on it, but it could have a move back to here, or maybe even 8. Last time I talked about it, it went from this to almost 12. So why can't it get back to $7-8 and just be a good trade? If let's take a look at the volume, basic studies. Did it have any volume today? Not really, but I guess overall compared to what it's had, a little bit of volume. And then you have situations like a Caterpillar and the industrials that have been acting better. That go-to list of macro stocks that we talked about that if you held even during that outside day has been acting very well. You've been providing yourself alpha by being an active investor. CAT played a little catch-up today. Big move. Okay, remember that reversal right here? This was that reversal. This is when it changed, and then it took back this area. We talked about the downtrend, and it couldn't control it again. It even took back, remember, this wedge right here, and now it's back up to 90 and change. So I wouldn't be out there chasing this now, but you know the drill. Look at the earnings gap. Let it consolidate. Let it try and hold it, and then perhaps see if it can go higher. We saw ISRG give you a nice little trade today. We talked about it. It too had the earnings gap, trying to hold it. Traded off the highs, but rightly so. It still looks good, still in the game there. So there are different strategies for different places. Even the banks were quiet today, but they're not really a headwind right now. They're not, places where psychologically, like, ooh, look at Bank of America breaking 550. That's not happening right now. Look at JP Morgan making new lows. No, it's in stride. So that's what we said had to happen for a better tape. You had to have the banks just in line versus, getting beat up and where people could point to. And at this point, you look at this, I look at Goldman Sachs all the time, so let's look here. I'm still in the XLFs. It's trying to break above this mini wedge. I guess tomorrow I'll look at this. If this can get above 105, we can get another cash flow trade. And if you're still long from either this outside reversal or when it broke 98.50, keep trailing it. It looks good. Not exciting, not crazy, but not bad for Goldman Sachs. If you look at the XLFs, you'll see here it's still following the path here. This was the reversal. This was the downtrend. Broke above and then held, showing some commitment. And now look, 1342. Been long this for a few days, trying to give everyone some conviction. So there are times, when you could let the market make you some money besides just trading for cash flow. And this has been one of those times. There's been some points along the way that get a little tricky. And I think we're back at one of those tricky points where, 1225, we broke above. That was Friday. That was your time to get back in. Here's the momentum trade. We're going to get to the resistance. But now we're at that resistance of the, just say first was like 1245 to 1260. And it could extend up to 1270, but that's a big zone. So to be a buyer into that zone the first time we're there could be tricky, but it's just going to be just as tricky trying to be short there. So just know your time frame, know what you're good at, know if you're not good at being short, just sell some longs into this and then see if it's worthy of your commitment to new funds. If you're trading longer term and you're still in your tier 1 and you had tier 2 or tier 3, get back to tier 1 a little lighter invested because you had your areas to add on. And if you look at I'll show you what those areas were or looked like to me. If you look here, this was your reversal. Okay, a lot of people had your macro tier 1. This wasn't a spot to add to it because there was no data that backed it up. We weren't sure. But right here is when I talked about this is when you can get to tier 2 of your favorite stocks or even just add to your market because it's holding higher. It held the retracement rules. It never even broke or retested any of these lows there. So this was your spot to add. Okay, and then into resistance, this was a spot probably to get back to tier 1. Spot to say, okay, it's got to prove that it's not just a range trade. And then on Friday when we broke above 1225, this is your spot to get back to tier 2, then perhaps back to tier 1 into this zone. And all of a sudden, you just held tier 1 for 150 handles. And then you took out, just say, 50 handles right here. Or you just took out another 25 handles for cash flow. And that's how you stick with positions, but then use chart patterns and technical analysis in order to add cash flow to your positions. You could overlap that chart with stocks and do the exact same thing. Tight patterns get your conviction to add. Once they extend, you get back to your original investment and let the market work for you. At this point, Wednesday is still 2 days away. We'll see what happens tomorrow. There's still a lot of action out there. I'm very proud of the community. No one really has short on the brain. Today was a little tricky. Everyone's kind of thinking about it because it feels like people who are at the casino, they've been playing red for 27 reds, pretty much. And that's when all the noise goes around. And remember, everyone going to a casino and you hear all this noise, and it's the roulette table because 20 numbers in a row came up like a red. So now it's like there's 27 reds. People who have not been involved in this pain trade think all of a sudden that they can make money and join the party, that if they start betting black at 28 reds, they're in better shape than the guy who's been betting red from 20 to 23. And then obviously you have the guys that almost like we're with Netflix, so to speak, thinking Netflix was a short of 200, but they ran out of money when it went to 300, and then it showed its signs, and obviously it's trading after market around the 100 after pre-announcing next quarter. So back to the red roulette scenarios, there's been 3 strong weeks in a row into a day one of the 4th week. Just because there's 27 reds doesn't mean 28 and 29 are going to be a black. So just keep watching. Each roll is independent of each other. You know the whole flipping the dice, but everyone does it anyway. So at this point, it's a hard long, but it's also a tricky short. So just know what you're good at, what you're looking to get out of it. This is a bigger resistance area. It's going to be tougher to initiate new longs into this area because it's going to be tougher to trust them. And again, they could push the envelope to Wednesday. The question is, do they pull us down a day before, or do they run us right through Wednesday? That's something that we're going to have to find out as we see more data and see more action in the stocks. But for right now, multiple positions are working with the hedge, and let's just not fall asleep behind the wheel because the bulls have been in control, and it's the bears to take back, and they have a lot of work to do if they're going to do so. Scott Redler, T3 Live, the recap, see you at the morning call. Have a good night.